What's good, YouTube? We're back with another breakdown on EURCAD. So starting off on the daily, we will draw out our structure to identify if we are bullish or if we are bearish. So this structure, as you see, may be a little bit difficult to identify, but I'm going to show you a tool that you can use to help you read structure more clearly. If you go to the replay tool, we're going to go all the way back until this candle right here. As you now see, the structure on our screen is a bearish structure because price went from making higher highs, higher low, another higher high, to now breaking the previous higher low, turning this structure into a bearish structure. So right now we are in a bearish structure, and anything in between this high that led to the new low and this low that will have a retracement, anything in between these two lines is still a bearish structure. Yes, you can have higher highs, higher lows, higher highs, higher lows, higher highs, higher lows inside of this bearish structure, but the overall structure is still bearish. So you have to be wary of that. So now let's remove these help tools and play the structure forward. So right now we're still bearish, still bearish, still bearish, still bearish. As you can see, price has not broken this high as of now and closed above it. So we're still bearish with this internal structure. We're just chilling, waiting, 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 waiting. And right now, this is where we get the setup. So as you see, we have this impulse to the downside, breaking and closing below the lowest point of the previous structure. So if I use my line tool, you can see this was the low of the previous internal structure, and we had a clear break with this impulse and a close below this level. The impulse to the down also has the same color, followed by a retracement of minimum 2 daily candles, also all the same color. If we now go to the weekly time frame, where we will draw our support or resistance that could be of influence. So right now you see we have a level of resistance right here. Price had previously come to this level, got rejected with this bearish engulfing. Price came back once again, got rejected with another bearish engulfing. Now price is going to retest it again, and as you can see on the daily time frame, we had this rejection candle. Let's play it one forward. You see we have this rejection candle right here, the shooting star. So how it is looking right now is that price is likely to going to reject this level once again and continue the trend to the downside. So if we go back to the weekly time frame, let's remove this candle right here, play it forward. This was how the weekly time frame was looking at the moment, and as you can see, it's looking like price is going to reject this once again and continue the trend to the downside. Then we go back to the daily time frame. We know price just came from resistance on the weekly. The daily is still in a bearish structure. We draw our fib in the opposite direction of the retracement to measure the distance of the new impulse that is likely to form. Then we go to the 4-hour, and on the 4-hour we will wait until the 61 level gets broken. As you see right here, price has clearly broken the 61 level. With this massive bearish candle, price has broken the 61 level. Now in my previous video, I explained when you should put your entry on the 61 level and when you should put it on the structure in between the 61 and the 38. So if you want to know why I put my order on this wick that I will explain later, you can get the full explanation in the previous video, the weekly breakdown. So normally right here, we put our entry on the 61 level. So we are expecting price to come back to the 61 after the break. Our stop loss goes on the 88 or above this structure level right here because it is then protected, and our TP goes on the negative 27. But as I explained in the previous video, price in this case doesn't have to come all the way back to the 61 level because we have structure in between the 61 and the 38. So I end up putting my entry on the wick of this bullish engulfing candle right here. So that was the reason that I didn't put my entry on the 61 level, because we had structure in between the 61 and the 38. So price doesn't have to come all the way back to retest the 61 level, but they can just retest this structure right here and then have the momentum to continue to the TP level. So right now we are in the trade and we're waiting until the 38 level gets broken. Now the 38 level is broken, we can put our stop loss to break even, and it now becomes a risk-free trade. So stop loss goes to break even and it now is a risk-free trade. We're just sitting and waiting until TP gets hit. As you can clearly see, the TP has been smashed with this massive candle, and this was the breakdown of my EURCAD trade. Appreciate y'all for staying with me, and I'll see y'all in the future with further breakdowns. Peace.